Welcome, everybody, to this week, and what a week it has been. It's good to be back once again on the live stream as we're getting, well, this week we're gonna have a second live stream, which is pretty darn cool. Thursday night, of course, is going to be our Hot Ones 2000 sub celebration stream. So I'm going to be doing the Hot Ones challenge live on the air with all of the hot sauces and me, and however I'm going to respond to them. So that's going to be really, really, really cool. We got an interesting thing going on in the market this week, and I'm going to talk a little bit about that. I've called it the calm before the storm. Why? Because there's not a lot going on this week in the market, and that could very well lead to some, well, a little bit of greenness, I'm thinking. So I'm thinking we got a good chance of having a green market. We'll talk about that. We'll talk about some of the news. It was a slow news week. I'll tell you guys right up front. So I got a little bit of news, but I don't got a lot. So obviously, whatever you guys want to talk about today, that's what we're going to be talking about. So just slam the comments with this, that, and the other thing. Heck, I'll even talk about the kitchen sink if you want to throw that in there too. All right. Jill's in the house. Hello, Jill. And we got Wayne. Wayne is back in Canada, and it's apparently pretty sunny there in Kingston. I like Kingston. Kingston, Ontario is a really nice city. I did live in Kingston for a few years back when I was a teenager. I went to Bay Ridge Secondary. So that's a high school out in the suburbs of Kingston. So loved it there. Wayne, are you originally from Kingston, or is that where you normally call home when you're in Canada? So let me know. That's kind of cool. All right, so we'll get into our first story. Our first story, of course, is all about the debt ceiling. Well, finally, it is no longer an issue, at least until next time around. It made it, as you noticed last week, they had come up with a deal that was pretty darn good. And now that they have made it through the House, they've made it through the Senate, and Mr. Joe Biden has signed it into law. So that is absolutely great. It means that we're not going to have everybody worrying on the market about that debt ceiling, because we all can agree, I think it would have been not a great time if they had defaulted on their debt. One thing I didn't mention last week is there was one provision in that debt ceiling about student loans. So they put student loans on hold during the pandemic. This debt ceiling part of the deal was to take those student loans off of being on hold. So people will, well, students will have to, or ex-students will have to start paying back their student loans because of that. And it's really interesting. I looked at a figure. Right now, student loans in the United States, $1.6 trillion. That's how much is owed on student loans. And that works out to about 43 million students, or well, former students who had borrowed that money. So that is really, really interesting. All right, we have Verena in the house. Hello, Verena. So good to see you. And Joe is mentioning Saudi Arabia is voluntarily cutting oil production by 1 million barrels. Yeah, oil at one point this week was down to about $67 a barrel. And we're talking about the West Texas Intermediate, so WTI. It has, but it rallied on Friday, which is good. I made a little bit of money on some swing trades on Friday with oil. And this is good. Well, it's good news for anybody who's playing oil. It's not the best news when it comes to driving and the price of gas and all of that fun stuff. But we'll have to sort of see how that goes. It seems to me one of the interesting things that Biden has been doing is every time Saudi Arabia or OPEC tries to make a move to boost oil back up, he starts releasing from the reserves. Now, you might be thinking, well, gosh, they can't have that much left in the reserves, but they have been quietly adding to their strategic oil reserves. So those numbers are starting to get a little bit up again. They're nowhere near where they need to be, but sometimes it wouldn't surprise me, especially when we're heading in towards election season in the US. So that will be really, really, really interesting. And Wayne is from Toronto. Okay, I've lived in Toronto as well, actually. Um, well, technically, Scarborough was part of Toronto. It's probably the only community I've ever lived in where on the news it's like police are looking for somebody who shot somebody with a crossbow. I'm like, what? Does that happen? Does that happen? All right. Now, Wayne's asking about my oil trade. What do you use to trade oil? HOU, HOD, or UCO, SCO. So we're talking, so like HOU and HOD, those are the inverse. Well, HOD is the inverse, HOU plays it, but they use leverage. So you can really make some big money with them. The only problem is, and this is what I find, is that you really have to pay attention to those if you're using them because where they're using like 2x leverage, things move a little bit quickly. So when I was making some swing trades, I was actually not playing oil directly, but I was actually playing BTE. So BTE, their price tends to fluctuate with the price of oil pretty well. So when you look at something like that, so when I look at oil companies that are really, really well correlated to the price of oil, they become very easy to trade. So I had put a trade in earlier in the week when the price was much lower, and then I just had to wait. So the trade I made probably took half a week. So it's a patience thing, but that's swing trading, and that's the nice thing because then I don't have to worry so much about it. And we got Jordan in the house. Good morning, Jordan. And Wayne is, oh my God, I'm also in BTE big. Yeah, BTE right now. The fair price on BTE is around $10 a share, and right now it's under $5 a share. So that is a stock that when it looks like oil is getting ready to run again, I'm going to pile some money into that and I'm going to ride it up. No doubt about it. And even now, I just did this one swing on it, made some money. I'm going to be looking Monday, Tuesday, see if oil does a little dip. If oil does a dip, I'll probably get back in again and sort of ride it up. So yeah, that was BTE. So definitely love that one. Now, one big thing in news-wise that came out this week, we had our Canadian GDP. So our gross domestic product number came out, and holy banana bread, we were up. Our GDP grew by 3.1%. With numbers like these, it's really hard to see a recession hitting us this year. And I was convinced we would have a recession this year, but now I'm beginning to think, it could pull it off. It could pull off maybe the end of the year. It's hard to say. There's still a lot of economists out there that are thinking that the TSX is going to do a lot of sliding second half of the year and that our economy is going to start sort of tanking a little bit. But right now, it's not looking like that. And with our job numbers still really high, that means that we have, well, on June 7th, the Bank of Canada is announcing their next rate hike, and the chances are starting to look like we could pull the pause and go with an actual 25 basis points. Now, a lot of people are thinking that they won't do it this time, but they'll wait till the first one in the summer. So they'll probably do it in July. It'll be interesting to see. I'm kind of torn on whether or not they're going to do it this time or next time. But I think if we see inflation still being sticky and the economy still being strong and job numbers still looking good, we're absolutely going to be looking at another rate hike. It's going to come. It's just a matter of this time or next. So we'll have to see. We got Jay in the house. Hello, Jay. Good to see you. And Scott's in the house. Hello, Scott. Scott's had a busy week himself. I know he hasn't been able to do his live stream. He normally does a live stream Monday to Friday at 11 p.m. Eastern. And he normally does that every day. But this week he was so busy, I don't think he got a chance. And Verena says, what will that do to the interest? Well, right now, that means your interest will go up. So if they go up another 25 basis points, that means mortgages are going to go up. That means, when you renew, obviously. So, yeah, it's not going to be good. But, we had a loan on the house, just on against the house for some extra money to do some investing with. And we had to re-sign that for another, and we signed it for 1 year only because a year from now, I have a feeling the rates are going to be a little bit lower. So we ended up with a pretty high rate. I think it was 8.99%, which is a lot higher than where it was when we had borrowed some money that way. All right, and Scott thinks that they're still pausing. Andrew says, I say hike this time and get it over with. Andrew, sometimes I think I'm with you on that one. Sometimes it's just better to pull the Band-Aid off, let the pain heal. We'll move on from there. They can cut it when the economy is back where they're supposed to have it. But right now, I think on the bright side, at least it is nice to see that the economy, for the most part, is working pretty well. I mean, it's not, well, it really depends on how much you make. I think a lot of the lower income brackets are really struggling, but that's going to happen either way. And in some sense, I'd like to be able to at least have a pot of gold at the end of the rainbow for them. Well, with the lower income, it's probably a pot of fool's gold, but who knows? We can still try. Let's see. Wayne says, I'm selling half now, leaving another half to move higher. Set your stop at BE, free trade on the remaining half. Yeah, that makes sense. It's one of the things too. When you're looking at investing, if you're looking at swing trading or any of those things, it doesn't hurt to take your profits from the table at all. When you're in the green, and I love that, where some people will get in there, they'll make some nice profits, and they'll basically take the principal off the table. So then what they got left on the table is all profit. So they can't lose in that situation. And, hopefully they'll win a bit more. So that is not a bad strategy. And Verena says, I took a variable on my renewal last year. So I hope that it will get better one day. It will get better one day. It's just, when is that day? That's the big question. It may not be tomorrow. It may not be next month, but I am hoping within about a year that we're going to start to see a little bit of an improvement. Risk-free. Yeah, exactly. When you take your principal off the table and you're just betting on your profits, it is risk-free. No matter what, you're leaving. Worst case scenario, if somehow you manage to get, if a company went completely out of business and went to zero, you're still leaving with the shirt you wore in. So you're not losing anything. So that's not a bad thing at all. All right. Another small story I was looking at was about EV charging stations. So right now in Canada, there's legislation that came through that basically says all new cars produced starting by 2035 have to be electric. That's cool. That's great for the environment. Wow, I'm all behind it. Traffic will be a lot less noisy. Maybe that won't be so good for people who who don't pay attention when they're crossing the street because they won't hear it coming. But here's the thing. At this point right now, we have 350,000 EVs that are currently registered in Canada. That's not a lot of EVs. But here's the thing. When you look at the fact that we only have 9,309 charging stations, that's a lot of EVs. And even if you look beyond the stations, you look at the people who also have charging ports. In total, we've got 22,092 charging ports. So that's not a lot. Right now, that basically is translating to people waiting to use EV charging stations. A lot of people now, if you have a house, if you have a house, you should be able to get your own EV charging port. You can put it in there and charge at home. The problem is when we start looking at every brand new car being an EV at 2035, well, we need a lot of these charging ports. And the problem is if you live in an apartment, I don't think landlords are going to let you go down there and install charging ports out in the parking lot. It's just not going to happen. So people who don't live in houses are pretty much going to be left to rely on the EV charging stations. So that's kind of a big thing. Now, the interesting thing about that is that it is estimated that for us to be able to hit that 2035 number, we're going to basically need 4 million public charging ports to make it possible for most people to switch over to EVs. Well, we're not doing so well on that, guys. We're at 0.5% of that target. So there's a lot of room to come with EVs if we want to meet those goals. Now, oh, now this is nice. I like this. Now Scott is also in Vancouver, and they tend to be a lot more green and they adopt a lot more things. For example, EVs a lot faster, but that's actually cool that there's 6 charging stations. And how many ports, Scott, are in each of those stations, just out of curiosity? Let's hope that there's not another ice storm. Okay, well, not now, hopefully. Yeah, that ice storm, that big ice storm that happened, I think it was it 90, 98 or something, somewhere's in that area. I was taking a bus from Calgary to Halifax. So Greyhound, that's how I used to get around. I used to love doing that just because the view, I can never get enough of the view for Canada. But what's really interesting is when in the middle of that ice storm, that's when my bus arrived in Montreal. So I'm at a Montreal bus station waiting for my connection, and they had payloaders in the parking lot breaking ice. So when I was watching that, I'm like, oh dear God, I don't think I'm going to get out of Montreal. But luckily I did. My bus was able to go, and we headed through Quebec, heading towards the Maritimes. So it was scary. It was really scary. So yeah, I would never want one of those. And the whole thing is, Kay Miller is saying our electrical grid is not ready. Yeah, that's a thing. You don't want to strain that electrical grid. And even right now, if everybody is going to be charging cars, there are areas where the electrical grid may not be able to handle that. So we may have to look at trying to, I guess I would say, look at some infrastructure when it comes to electricity. Now, one thing that is nice about Canada is most of our electricity is actually renewable. A lot of people don't realize that. We're up around, I don't know the exact number, but I thought it was around 65%, somewhere in that area. Now, that's because a lot of the electricity for Ontario, the Maritimes, and Newfoundland, and Quebec all come from hydroelectric. So that's supplying a lot of electricity. So yeah, hydroelectric is pretty much our biggest form of electricity in the country. So we would need to have a better grid. We need to also maybe work on the battery technology. The more we can run these cars on, the less energy, or at least the more efficient the batteries get, that could also help. So maybe look at both. But the other thing too is it doesn't hurt to improve the electrical grid, for the simple reason that not just people using it from cars, but you want to be able to handle the capacity. Keep in mind, Canada is growing. We're bringing in a lot of immigration. So we're like 1 million people a year. They're all using electricity. So it makes sense to improve our electrical grid. And going off on a tangent, science keeps warning us about that that solar flare, that M-class flare that'll eventually hit us and maybe cause a lot of damage to our electrical grid. And this is something we can actually harden. We've got the technology to completely protect ourselves from solar flares, but nobody wants to do it because it will be expensive. So that's kind of one of those things. That's one of the problems, I think, with politics, is that our politicians are only looking for, at their term in the next election. They're not looking 10 years down the road. They're not looking 20 years down the road. And if you were to commit all of the finances it would take to rebuild an electrical grid, harden our electrical grid, that's going to be something the other parties are going to attack you on, because you're going to be spending a lot of money. So is it worth it? If the sun decides to get angry enough, absolutely. But there's always the chance that the sun doesn't get angry enough, or that there have been flares that would have done it to us, but they have missed us. I think there was one that missed us by just a couple of like a couple of hours. Like it was so close. Um, the last time we got hit by something that strong, it was actually called the Carrington event. It was back when we had telegraph wires, and the electricity and the generation that was generated by this was so strong, it actually caused some of them to catch fire. So just think about that. That's just energy from the sun coming in on the lines and causing telegraphs to catch fire. So if that had happened, that event, the Carrington event happened today, it would absolutely fry out our circuitry. We would probably be looking at a lot of blown transformers. There could be a possibility for 6 months of power outages in some places. It could even be worse because it takes a lot. Like if you were to blow every transformer in North America, let's just go completely doom and gloom. To replace them, it takes a long time to actually build a transformer. We don't have them all. We don't have like enough transformers already built, so they would have to be built. And of course, they have to build them without electricity. So they would have. Well, we would work on getting some kind of electricity up, but for society to get back to normal, it would take a long time. So just based on that alone, I don't know. I kind of lean in. Let's harden our electrical system a little bit. So we'll see how that goes. All right. And Mr. Red Taco says, well, they better fix the capacity during the 40 dead winters. Yeah, we need to get, like I said, we need to improve our electrical system. They can add all the chargers. Our grid can't even survive a heat wave or long winter snap. Yeah, I mean, I know some places like, I know the Maritimes has a pretty bad looking grid. I actually like, I kind of like Calgary's grid. And the reason I like the grid in Calgary is if you've ever been to Calgary, look around and see if you see any lampposts, any power lines. No, it's all underground because of how much lightning they get. So they've already kind of protected themselves by moving things underground. And I think that's a nice way. Look at it this way. If you moved all of your lines underground wherever you could, when you can, that's a lot less trees that when they fall, taking out lines. That's a lot less ice building up on those lines, breaking them. So that's not a bad idea. Mr. Red Taco says, I highly doubt we'll be 100% electric in 12 years. Well, no, we wouldn't be 100%. It would just be at that point in 35 that the new ones coming off the lines would have to be electric. So, and here's the thing. I don't know if you can get away with like a hybrid at that point, a brand new hybrid, one electric. So anybody who bought it in 34, for example, they're still going to be driving that gas car probably, for the next 15, 20 years. So yeah, there'll still be a lot of gas going around, but it'll just be the new cars, and that's if, once again, we're talking politics. I mean, the conservatives could get in and say, no, that's not reasonable. And it probably isn't reasonable. I don't think we're going to be ready. So hopefully a future government will be, okay, well, let's move that to 2040 or something like that, just to make sure that people can be ready and that our grid can be ready. Let's see. Certain people are pushing it so they can make money. It's not going to be 100% beneficial for the population right at the start. Well, yeah. Normally when you want to find out why something's happening, follow the money. That's where it goes. And Mr. Red Taco also says, when I lived in BC, because the lines were above ground, the power would go out at least once a year during a thunderstorm. I've been in Alberta for 20 years now, and the power has gone out twice. Exactly. And that was the funny thing. When I first moved to Calgary, I was out watching some thunder and lightning one night, and then it just dawned on me. I was looking around, I was like, wait a minute. There's no power poles. And, I probably had been there for about 6 months and it just didn't dawn on me. But that's because they still have like street lights. So you see the street lights, but there's no wires going between anything. So that was always kind of a cool thing. All right. But those are those EV power, EV cars. It'll be interesting. Now, another big company making the news this week was Meta. So Meta right now they're kind of in a war, not so much with the Canadian news, but the Canadian news is their target. But there's a bill out there. It's called the Online News Act, and it's Bill C-18. Now, what this bill is trying to do is it's trying to force all of the big social media people to basically pay money to different Canadian news people and to promote. I don't know if they want them to promote Canadian news a bit more, but the thing is, Meta's like, yeah, we're not doing that. So what Meta's doing is right now they're currently running a test. So they've got 5% of Canadians picked for this test, and they're going to basically block those Canadian users from being able to view news on Facebook, only on Facebook. So basically, you wouldn't be able to see, post, or share any kind of news articles on Facebook. And then they've said that once this happens, if of course that bill gets enacted and becomes law, so once the Online News Act is law, they're going to do it to everybody. So there'll be no news. Now this will hurt. It's not going to hurt Meta, and it's not going to. Who is it going to hurt? It's going to hurt the online news people, Canadian ones. So, because a lot of times that's how their stories get around. That's what drives a lot of traffic to their website. And I'm sure that everybody here has done it. You've been on Facebook and you've seen a news article from CTV or something, and you head over to CTV and check it out. So, and that's interesting. Jersky. Jersky is in the house. Hello, Jersky. And yes, they did do it in Australia, and I think there was a whole lot of problems with it, and I don't think the actual act ended up getting passed. So, but it was a mess. It was an absolute mess, and they're kind of looking to do that in Canada. But I mean, as it is, Canada, we already have a few issues going on with some of these guys. Like they're not happy about the Bill C-11, which got passed. Let's see. So, well, Meta isn't going to want to lose money or pay money for everyone else to make money. Yeah, that makes sense. And partly, too, Meta is like, it doesn't matter to us. If we block those, we're not going to lose money. And they're not. I mean, nobody's going to leave Facebook because they can't, get a CTV news article. But now you take it. Here's something. Here's an unintended consequence. So you take something like something owned by CTV News, or like a charity event or something. Like I think CTV News kind of owns or is partially affiliated with Christmas Daddies in the Maritime. So will they block those too? That would be interesting. That would be an unintended consequence if they were to do that. So hopefully that doesn't happen. I'd like to just it's kind of one of these things. I understand everybody wants to make money and I know what Bill C-11 was, that one that was that's that online streaming one. So the CRTC has a whole bunch of new powers because of the Online Streaming Act, because that got enacted. Now nothing's happened yet. It's going to take probably, for those people who are like, oh my God, any day now they're going to start making me watch all kinds of Canadian content. Not yet. It'll probably take the CRTC about a year to figure out exactly what they're going to do. So we'll see maybe in a year what happens. But here's that thing. I think the thing that worries, YouTubers anyway, is that what they define as a commercial is that if you're making any kind of money. So I have a channel. I am making like $100 a month on my channel. So that would technically, according to the Liberal government, make me commercial, which would then mean that I would be one of the people who could be impacted by whatever rules the CRTC puts into place. Now, I'll deal with that, of course, when the CRTC does it. But for the moment, I'm not too concerned about it. And that to me is funny. Let's see here. Mr. Red Taco says, I got an ad for quitting smoking, then an ad for cheap smokes. I've never smoked. Yeah. Well, here's the funny thing. I've started getting all of these cheap cigarette ads in my Facebook feed. And I'm like, what the hell? I don't smoke. I don't need to see those. So I clicked on it and said, don't show me the ad again. I've tried every possible reason for them not to show it to me again, but they still do. And sometimes I even think that because I clicked don't show it to me again, they're trying to show it to me even more. I'm like, dear God, stop it. You're not going to get any money from me. The only thing I can think of is that whoever this company is who's selling cheap smokes, I guess I'm costing them money because I'm probably I'm probably watching half of their views. It's hilarious. Oh, this is on YouTube. Oh, I've not had that happen to me on YouTube. I have that happen on Facebook. So no, luckily YouTube. Well, YouTube as well. I've got the I've subscribed, so I don't see ads. But yeah, if I start seeing ads, then I'll stop the subscription. That's for sure. I get ads. You get ads in French, Arabic. That's hilarious. Um, I do occasionally. I know before I subscribed to YouTube, I would occasionally get a French ad, and I'd be like, "What? Why am I doing this?" So it's kind of one of these things. I do sometimes get a French video in my recommendation feed, though, and I'm like, "Why are they doing that?" So I just sometimes I think the algorithm, it's not the most intelligent algorithm, but what can you do? All right. So, like I said, this is a really slow news week. So, we're just going to chat about whatever. Before we do, I'll just let you know what's going on in this following week coming up. So, for Canada, on Wednesday, we do have the Bank of Canada interest decision. So, we'll have to see if we get that pause or the 25 point. And on Friday, we have job data that's dropping for Canada. So, we'll see if, how the job market is doing. In the US, not a lot going on next week. Thursday is jobless claims. That's about it. So here's that thing. We've got next to nothing happening in the market next week. So this is our calm. And this is where I'm thinking, if you're looking to get if you've got a stock right now that is in the red and you're hoping to sell it once it gets green, pay attention to it this week. Maybe it'll happen. Maybe it won't. I can't guarantee anything. Sometimes I've seen situations where the market looked primed for a great week, and for no reason I could even decipher, it just went. That happens. So sometimes you have to sort of play it by ear and just go with whatever is going on. Okay. Oh, here we go. Got some iced coffee here. So that's the news. Well, one other thing. If you are invested in Dollarama, pay attention this week because their earnings report, I don't know which day it is, but their earnings is coming out, and that will be interesting. Scott, this is a great topic here. So all eyes on Apple tomorrow. So Apple is looking to introduce some new goggles, so kind of your VR set. So we're going to have to see. Now, this is for developers. It's not for like everybody, but they're looking at doing it for developers. And the reason they'll drop it for a developer first is it gives them a time before they're ready to start selling it publicly. It gives those developers time to start building apps and things to use with it. But this will be very interesting. Some people think that these goggles, or helmet, if you want to call it. Some people are calling it a helmet, that they're going to be a game changer. So I really want to see. I'll be watching that tomorrow to see exactly what they look like. Right now, it's all speculation because Apple does tend to keep things pretty close to the vest, at least the best that they can. But this will be. Oh, thank you, Wayne. And Wayne was mentioning Dollarama earnings are on June 7th. So that is going to be interesting. So here's this thing. And this is the type of thing I'll do. I will look at Dollarama and I will do a quick analysis on them. And if it looks like their earnings are going to be above expectations, I might drop a few more dollars on them just because they're going to go, kind of like it won't be like, I was going to say NVIDIA. It won't be like that. You're not going to see a massive pump, but you'll see a pump. There's normally a pump if they have a very positive. Now, they are in a market that is recession proof, and I think their earnings should be good. So we'll have to watch and see. That'll be a fun one to watch on June 7th. Now, I don't know if do you know, Wayne, if if they're announcing in the morning, or because they normally will announce either before the market opens or right after the market closes. So that'll give you a general idea how to pay attention to that. So that's going to be kind of neat. And Jill says that Meta is releasing their new What VR headset this week, I believe, as well. And here's the funny thing. People are so stoked for the Apple one that nobody's even thinking about the Meta one. So that'll be interesting. I mean, we need a half decent headset that comes along. I like the idea of augmented reality personally, where you can put on a headset and you can still see everything around you, but then you can get just little things that pop up, whether it be the internet or this or that. I think that would be kind of cool. So that's one of those things just to sort of keep in mind. All right. Now, let's see. Is there a way to buy a portion of a stock and not the whole stock price? Like say $50 for a stock that is worth $100. Is that even possible? Well, yes. I mean, that is fractional shares. Now, in Canada, as far as I know, the only people who offer that is Wealthsimple. So with Wealthsimple, and it's not for every stock, but most of the popular ones they have fractional shares for. So you could buy even a tenth of a stock and do it that way with them. Because what happens is basically behind the scenes, well, this happens if you know how a broker works. So Wealthsimple, when you buy a stock from Wealthsimple, they already have that stock. So they're not going out and grabbing it fresh off the market. Because what happens is Wealthsimple is buying all of the popular stocks, and they're usually buying them when they're in the dip. So Wealthsimple will buy the dip every single time. So when the market goes down, Wealthsimple is filling up their stock bins. Then, a month after they filled up, let's say they bought Microsoft at $200, and Microsoft is at $250 now. I don't actually know where Microsoft is. It's 2 something, I think. But let's just say they bought it at 200, Microsoft sitting at 250. You come along and say, oh, I think I'm going to get in on Microsoft. So you buy that stock for $250 because that's the market price. You're getting it at fair price. But they bought it a few months ago at 200. Now they're selling it to you at 250. Will you ever ask again, how does Wealthsimple make money? Probably not, because that's how they do it. Wealthsimple is always buying. They know what type of stocks they're going to be selling regularly. And when that stock is at a good price, they're buying up. They're filling up their coffers with it. And then they're selling it to you whenever it is that you buy. So, 7 a.m. on Wednesday. Very good. So if I'm making any moves on that, I will need to do that on Tuesday. Good move, Wayne. Wayne, you're awesome. Gotta love Wayne. But that's one of the ways that they do make money. And people, when they talk about the spread, you're talking pennies. That's not really where a lot of the money is. A lot of the money is just the fact that you're keeping these stocks on hand and you're just transferring ownership. So and all the brokers do it. I don't want you guys to walk away thinking, oh my God, Wealthsimple is hosing us. They're not. That's just how brokers work. And that makes sense. It's the same thing. The same thing as the person down at the retail store. Like, the guy down at the dollar store, or not, let's not use dollar store, let's say the corner store. He's not, when he sells you milk for $5, he's probably getting it for $4. And it's just the normal profit. It's the way things work. So it is kind of good. And that's why, a lot of times when we get into the bull market again, you'll start to hear all of the buy the dip stuff. You'll have YouTubers that'll come around and make buy the dip songs. I think Kevin had this crazy buy the dip song last time we were in the bear market. So it's just one of those things, right? So let's see here. Buy the sizzle, sell the steak on stock earnings. There you go. Absolutely. And everybody needs to make money because it is how business works. Couldn't have said it better, Mr. Red Taco. That's awesome. And Vinit is, I can't believe I'm late. Well, that's better than saying I can't believe it's not butter, I think. Anyway, I have no idea why that came out of my head. It just did. And then Mr. Red Taco says, if everybody sold at a loss, no companies would ever survive. Yeah, absolutely. And it's just the way things work. I mean, that's the whole market. The whole idea of the stock market is buy low, sell high. The brokers do it. So can you. So that's one of those things. Just when you see a good deal, buy it. But here's the thing, and this is what gets a lot of people. Sometimes you'll buy something, you'll get a great deal. So let's say, for example, you're looking at Banana Co. and it's on for $20. And you're thinking, oh my God, that's a great price. So you buy 100 shares of Banana Co. at $20. All of a sudden it goes up to, it starts to go on a little run. And you get up there a little bit. And what do? You're thinking, oh my God, look at how much money I made. So you then sell it all. But then the thing is, though, is it keeps on going up. And, so sometimes people jump out way too soon. And this all goes back to the beginning of this chat. Take some profit off the table, but leave some stuff in there just so that you can get, you can get some more profit. Let me see. Would you suggest Wealthsimple or Questrade? I've got two answers for you. Wealthsimple, I think, is a really good broker. I do recommend them. Heck, I've even got the affiliate link down below. If you don't have Wealthsimple, grab the link, sign up. We both get some money. That's cool. The no commission is fantastic. They are always, the thing I like the most about Wealthsimple is that every time there's a feature I want and I'm dreaming about, Wealthsimple automatically comes along and does it. So that to me is really, really, really good. Now, with that being said, Wealthsimple Plus, if you have $100,000 in assets, perfect. You don't have to worry about it. You get Wealthsimple Plus for free. But if you're paying that $10 a month to be able to maintain the American accounts, I thought those actually looked pretty good initially. But you know what? I made a mistake. I didn't do the math on those. And I was actually Brandon Beavis who did the math, broke it down in a video, and I was watching the math, and I was like, oh my God, you're right. Unless you're making a lot of trading on your American accounts, having the separate US on the plus side, that would make sense, but you need to be making a lot of trades. If you're not, if you're just going in, you're buying the occasional Microsoft share or Apple share, then it doesn't make sense to go with the plus. It's better to just, have the conversion whenever you do buy it. You let it all sit there within your regular account. So it actually is more cost effective to go that way. Now, here's the other thing. With Questrade, if you are more of a long-term holder, you're not making a ton of trades because they do charge. If you're looking at just long-term and you are looking at holding a lot of American assets, then I think Questrade is, I wouldn't say it has the edge, but I think it's not a bad choice at that point. Okay. Now, let's see. Well, I used to buy stocks. Whole price on it was hard. I got out of buying stocks a couple of years ago. I'm thinking about getting back in again. Yeah, so Wealthsimple, Mr. Red Taco, if you use Wealthsimple, you can buy you can buy like a half a stock, a quarter of a stock. You can basically buy let's say we'll use Microsoft since we've been talking about them. You can go in and say, I just want $1 of Microsoft, and you'll get whatever $1 is in the fraction. So, maybe 0.00128 or something. So yeah, no, it's fantastic for that. And that definitely is one thing you won't get over on Questrade. And another thing too is Wealthsimple is now looking at bringing dripping in so that you can do the dividend reinvestment plan. So have them automatically if you want. So that to me is another move in the right direction. And Banana Co. Yeah, I love that. That's my little company. I should get like a Banana Co. employee shirt or something, and then I'll have merch. That would be funny. Let's see. We should be happy that it exists, even if it's in their benefit. I'm still waiting for Questrade to do it. Yeah. Yeah, no, absolutely. Like I have no complaints. I really don't about Wealthsimple. And then Banana Co. to the moon. Wealthsimple or National Bank? Okay. Great question. I love Wealthsimple. There's nothing wrong with Wealthsimple, but I will say I do like National Bank for the Big Six. And I like the fact that they actually took that leap to get rid of their commissions, which is great. They also will allow you to have US accounts for free. So here's the thing. If I had to choose right now, I'm going to bring in Questrade. If I had to choose between Wealthsimple, National Bank, Questrade, I probably would stick with Wealthsimple. I would put National Bank at a really second close. And right now, Questrade doesn't meet the needs that I have. So I probably would go with Wealthsimple, then National Bank, then Questrade. And Richard from Montreal is in the house. Hello, Richard. And let's see. Oh, I've seen that Brandon video. Yeah, absolutely. So yeah, that was definitely a really good video. So let's see here. Wayne Smith. Wayne says, Warren Buffett, buy when they're bleeding, sell when they're screaming. I kind of like that. It's almost like a Tim Burton version of Buffett, which of Warren Buffett. Or then maybe it would be War and Buffett. I don't know. Let's see. It's not worth it if you're doing it here and there. Let's see. All right. I am with Wealthsimple with managed investment for the long term, but I'd like to start trading myself. Well, if you're already there, Verena, I would just stick with Wealthsimple, and do it yourself. Do you think Wealthsimple managed investing is a good thing? Well, any investing is a good thing compared to not investing. However, here's what I would say. I wouldn't say just get rid of the managed investing if it's doing good, but get your feet into doing it yourself. See if that's something, see if the time commitment, see if it's something that you can do. If you get in there and you get really nervous and it's just like, oh my God, it's stressing me out, then stick with the managed investing. But, if you keep it all in one place, it makes it really easy for you to move it if you do decide that you want to, which is kind of good. Now, with a TFSA, for example, you can move that from one account to the other. So from one bank to another. So if I wanted to move it from Wealthsimple to National Bank, I could do it. It would take about 10 business days, but I could move it all there. Now, part of me wants to, only because I've got some funds over at National Bank. That's where I do the swing trading. And it would be nice to have it all together. But here's the thing. I love being able to let people see what I'm doing over on Blossom. So Blossom doesn't yet have National Bank or at least have an in to be able to see people's National Bank accounts. So for that reason, it's just everything is staying where it is. And since I mentioned Blossom, quick little selfless Blossom plug. Below, I've got a link over there to Blossom. So if you go over, check it out. It's an app, so you'd use it on either your tablet or your phone, but you can go in, you can see what I'm doing. You can see, I post different things and I interact with folks over there as well. So it is a really good environment. And what's beautiful too, is like, if you have a question, you post it over on Blossom, you will have a lot of answers really fast. So you get a lot of help faster. I'll jump on and answer if I see it. You could also have anybody like Canadian in a T-shirt might jump on and answer you, or maybe even Brandon Beavis, because we're all over there doing our thing. So to me, it's just a really great way to interact. And a lot of times too, if you're looking for just different ideas, don't wait for me to get a video out to give you some ideas on things you might want to do some due diligence on. Head over to Blossom. Tons of ideas there. And it's actually interesting. My video that's coming out tomorrow was inspired by a conversation on Blossom. And I'll mention that a little bit later as well. So only because I think I'm falling behind here. Let's see. Wealthsimple plus drip equals rocket ships. Yeah, absolutely. Let's see. Do you or anybody here trade options? I don't trade options. I've looked at it. I've got books right behind me. Like some of the books right next to the briefcase are about options. But I don't, although I do love using covered calls. So that is having somebody else do the options for me. But it does sound like an interesting idea. And I may play with them someday, but right now, not at this moment. Sounds like a bumper sticker. What is your view for TELUS for the next 6 to 12 months? Okay. If I were to say anything about TELUS, I would call them a hold. If I were to do sell, buy, or hold. And I'll tell you why. I think right now, for at least the next 6 months, as the New Freedom, which has now got plans coast to coast, we kind of don't know how that's going to shake out when it comes to the big three. So I wouldn't sell, but I would be a little bit more careful about adding, only because I think that, well, I don't want to say be careful about adding. I think we're going to see them go down a little bit probably in the 6 months. So there may be some opportunities to get them a little bit cheaper while this all shakes out. So I would be a little bit careful with TELUS. I wouldn't sell. I would hold, maybe add to them, maybe DCA through the next 6 months, because I think you're going to get some better pricing. And yeah, managed investing is way less stress. And K Miller says, my Star Trek communicator flip phone won't let me have apps. Holy banana bread. That's never good. Richard says, cover calls for options is really good. Yeah, absolutely. I've been, I'm a huge fan of cover calls. They do some really good stuff. There's actually, Hamilton has a new one coming out soon called UMAX. I don't know exactly when it's dropping, but that'll be another one just to check out. The last one they had out, of course, was the HMAX. So it'll be interesting to see how that goes. Do you think AQN will bounce back soon? No, I don't think they're going to bounce back soon. I think they're going to bounce back. I think it's going to be a little bit longer of a process. So I think with AQN, I think if you're looking out long term, you'll be smiling that you've been able to get it at the prices that they're at today. But if you're looking for a quicker return, they may not be the stock for you. But I do think they are still going to, I think they will get back to glory, but it's going to take them some time. And there's going to be a little bit of pain before we get to a point that, that you can be proud of them again. So yeah, that's kind of that whole AQN. All right, so tomorrow's video, I'm going to talk about that right now. So what I had over on Blossom, there was a discussion going on about Canadian ETFs that hold American assets. And the whole conversation was about some of the taxes. Now, I know that Brandon Beavis did a video, and Canadian a T-shirt, I believe, also did a video on what happens when when you hold a Canadian ETF, but it holds American assets. All right, so I'm not going to do a video right now because I think those two videos are great. Now, I did do a different type of video, but I'll tell you about that in a second. So in a nutshell, what happens is, let's say, for example, you have you have an ETF. So even though it's based out of Canada, maybe it's HYLD, or maybe it's one of the Vanguard ones, but it's holding all these American companies. So here's the thing. The actual way the taxes work on that is that, let's say they're holding, we'll say they're holding the US version of Banana Co. and they have a 10% yield. Well, you're not going to get that 10%. That company, the ETF company, won't get that 10%. They'll only get 85% of that 10%. So the 15% still gets taken. And this is regardless of where you keep that ETF. It doesn't matter where you put it. The 15% is taken before the company. So, Banana Co. ETFs, before they can give you that. So what that means is that when they are quoting their returns to you, that money's already been taken. And what they're quoting to you is Canadian. Everything works fine on your end. Like, you don't get any amount taken from what you see. But the reality is, behind the scenes, 15% was taken by Uncle Sam that you're not getting. So the whole gist of that video was that if you could find a American version of that ETF, then drop it into your RRSP, because we have a tax treaty with the US, your RRSP would not lose that 15%. So you could conceivably be gaining an extra 15% over the Canadian version, but you would have to put it in your RRSP. If you put the American version in your TFSA, for example, that 15% is just simply gone. Or if you do put it in your personal, so outside of a registered account, You do get that 15% back at tax time because you can claim it, but you'll lose it initially. So that's kind of that whole idea behind that. So for most people who don't even know that that's happening behind the scenes and they're completely happy with the dividends that they're receiving, they probably don't care. But I did have a few people talking about, okay, well, what about if I want high dividends and I don't want Uncle Sam to get any of it, what can I do? That's what tomorrow's video is about. I found 5 ETFs, and they're all covered call, by the way, that have higher dividends, and everything they hold 100% Canadian. So there's no American in there at all. So the IRS will not be touching any of your money. You get everything. So that's what tomorrow's video is all about. Thursday, who's this Uncle Sam? Oh, Uncle Sam is the IRS. It's kind of that nickname. The tax man in the US, they've always, Uncle Sam is kind of like he's always referred to as either the tax man or the US government or whoever is taking your money from you. So sounds like a terrible uncle who just wants moochies. Yeah, exactly. All right, now I did miss here. TFSA. And says, oh yeah, Verena says, yeah, I did watch the video about ETFs and taxes. So there we go. And Vic, I missed you saying you're here. Welcome, Vic, even though we've already been talking. But can you get it back if it's a retirement account? No, there's no way to get it back at all. Now, there is a possible way in very, very, very narrow circumstances. It has to do with whether it's wrapped into, you can put it into a wrapper, but most companies don't do that. And the process to get that back would be very difficult, really not worth it, in my opinion. Let's see. Phil B says, the only way it makes sense is in a TFSA is if you have Wealthsimple, simply because Wealthsimple won't charge you for the currency conversion of the dividend if you don't have Wealthsimple Plus. Yeah. And that's the thing. I mean, you're going to get hit with fees anywhere that you are. I mean, you take Wealthsimple, when you get paid a dividend, they're going to pay you in a Canadian. So there's definitely a conversion that happened behind the scenes. So it's just one of those things. If you do have the 100,000, then woohoo, wonderful. Then you can have it for free. Yeah, that makes sense. Let me see here. Would you recommend VectorVest or Stock Unlock or any apps like that? Right now, I wouldn't recommend either, only because I haven't used them. I'd have to actually look at them to see. Right now, I do a lot of my own background stuff. So, for example, I keep a lot of spreadsheets. To me, that's just kind of fantastic. All right, let me see here. HMAX is all. Well, let me tell you, HMAX is 100% Canadian. So you probably know that you might see them tomorrow, huh? Canadian blue chip. Yeah, no, HMAX is a fantastic stock, fantastic ETF. Let's see here. Uncle Sam, the same guy who recruited soldiers. Yeah, it's basically he's the kind of like the poster boy for the U.S. government, U.S. taxes. Yeah, you see him everywhere. Anytime you're referring to a governmental agency within the U.S., you can call it Uncle Sam if you want to. But yeah, and Mr. Red Taco is right. They used to have him as a, Uncle Sam wants you in the U.S. Army. And let's see, if you have Wealthsimple but not the Plus version, you're better off getting the Canadian version ETF without getting dinged for currency conversion on the dividends. Yeah, absolutely. Absolutely. And that's one of those things. It depends on where you are. Now, if you're in National Bank and you have the US, then you're not getting dinged on anything because you're holding an American balance. Let's see, my covered call ETF starting to suck. Here's the thing. In the bad times, a covered call ETF, it's going to lose value. Like the capital is going to erode. That is absolutely normal. But behind the scenes, the way covered calls work, you're actually outperforming the market from that. You're still getting a lot of premium coming in that's supporting it. And even now, like best case with the covered calls, what we want is we want to go into a bull market, but we don't want to go into a strong bull market. If we go into a sort of a lazy climb up bull market where it just takes its time, like a slight slope, that is ideal for covered calls. And that would be really good because then you're going to see your capital coming back and it's going to support all of your premium. The premiums will be supported. So you'll get a lot, you'll have no problem with those dividends. But yeah, you always sort of want to watch. Like normally, two areas where covered calls tend to do poorly is with a very strong bull market and a very weak bear market. Those tend to be the areas where they're not always hitting their premiums. So it is what it is, unfortunately. But I'm hoping for, and I have a feeling the way I've been looking at it is the way the economy is shaping up. I see the bull market as being that slope, that ideal slope for covered calls. So I am looking forward to seeing that. Phil says, I like Stock Unlock. It gives you a quick view of a company is healthy or not, but you still need to do the work and do a deep dive on them and not just rely on their numbers. Yeah, absolutely. The more you can get involved with fundamentals, and there's a lot of different programs out there that will give you some really good looks. And I mean, I use Simply Wall, for example, simplywall.st. Now, on the free version, I think you can look at 4 stocks a month. On the paid version, well, at least the first tier of paid version, you can look at 30 a month. And I have it set up that way. And I just find that it pulls a lot of data together. But the big thing is it does my fair value calculation, so I don't have to do them manually. And doing a manual fair value calculation, it's almost an aspirin sandwich level of formula because there's a lot of things in it that you have to pull in, and there's a lot of calculations just to get some of the terms that you're going to use within that formula. And I'm still trying to make a video on it, but I'm trying to make one that's not going to be the type that you almost need a degree to come into to understand, because it can get a little complicated or pretty fast. So we'll have to see here. Let's see here. Not going to pay for any of that. Yeah. All right. And you don't have to. I mean, that's the thing. There's a lot of free stuff out there. Learn to do it yourself and invest whatever you have paid. Yeah, exactly. Let's see. Alex Stock Unlock gives a quick view. Oh, I think we were already there. Here we go. They should replace Uncle Sam with Aunt Jemima. Well, I don't know what pancakes have to do with with investing. I guess pancakes rise. She's no longer so. That's right. That's right. I think it's now Ocean Pearl, isn't it? Ocean Pearl something, or Ocean Pearl pancake. I don't know. It's something like that. Let's see. And a certain someone has to do their fair value video. Yes, I know I do. I know I do. And it's just one of those things where it's like, right now, I've got my mind focused on one thing. We got a live stream Thursday night. So Thursday nights, we're at 8 p.m. Eastern. That's when I'm doing that. Whoops, I'll move over here. That Hot Ones 2000 challenge. Now, I'm not at 2000 yet. I'm 15 subs away from 2000. So I think there's a chance we'll be there for Thursday. That would be perfect if we hit 2000 on Thursday. But I wanted to schedule it. And even if I'm a couple short, we're still going to go ahead with it. It's like we're close enough to 2000. Let's just do it. Let's have some fun. At my expense. we'll see what we can do. So I've got to, if you guys still have any questions you want answered during that stream, just, go over to the Facebook group or just go on to any of my videos and just dump a question down there. Just be careful. If you dump a question on a video, just on a random video, just put Hot Ones at the beginning of it. That way there, I don't just answer it and move on, because that would suck if you put a question for the stream and I just answer it in the comments, but move on to the next one. So yeah, definitely do that. I do have some right now. I've got a couple of really good questions, and I got to rank them before Thursday because I want the easiest questions at the last heat, and at the high heat, I want the hardest questions. So I'm just going to rank them that way, and we'll put them, and we'll have a lot of fun. That's going to be great. That'll be a fun night. Let's see here. Richard says, have you heard about these AI claims for making lots of money? Yes, of course I have. Problem here using AI is that you got to look at it this way. If AI is making people a ton of money through investing, everybody's going to do it. And it's going to make it harder for AI to pull this off. But I think what you may be making reference to is I know that there's some group that was using some AI and they were doing a whole group of picks. And I don't know how quickly they were changing it. I've seen it. I think Graham Stephan did a video about it, and I think even his buddy there, Andrew Zick, also did a video on it. But here's the thing about the AIs. I think you got to take it with a grain of salt right now, because you take something like ChatGPT. For most people, it's only giving you access to data up to 2001. There we go. Pearl Milling Company. There we go. Thank you, Kevin. Or Kay. I just see Kay and I think Kevin every single time. I don't know why. Now, Kay, does your name happen to be Kevin? Because if it is Kevin, then that's awesome. If it's not, then my apologies. I don't know why I think Kevin when I see your name, but I do. So what was I going to say? Oh, right, about AI. So even if you use the damn thing to sort of jailbreak it out of that 2000 loop, I will find that if you ask it for you ask it for some stocks, you give it the parameters that you're looking for. I find it just guesses at which ones it should do, and half the time it's absolutely not even remotely accurate in the advice that it will give you financially. So I don't think AI is there yet, at least on the ChatGPT side. I think we're probably going to get there faster and sooner than we think. But right now, I would be very, very leery of following AI, especially when it comes to your dollars. I would even say, even if you're following, my advice or any YouTuber's advice, even then, don't listen to any of us. Write down what we say, and go check it out for yourself. And that's that thing. That's when I say do your due diligence. It's like, hey, I love Canoe, for example, but you know what? Not everybody loves Canoe, and you're allowed to not love Canoe, and you're allowed to disagree with what I say, and you're allowed to come back and say, Candace, you're an idiot. And I'll be like, okay, cool. Let's find out why. And I'm the type that I'm receptive to stuff like that, because if I make a mistake, and I will make mistakes, absolutely. To me, the definition of a good person is that you'll make your mistakes, but you'll learn from them, right? So you shouldn't really be making the same mistakes twice. You should find brand spanking new mistakes to make, because heck, at least be creative when it comes to it. But yeah, I wouldn't listen to AI. Don't listen to YouTubers, and or don't listen to neighbors. Anytime anybody is out there talking about a stock, saying it's the greatest thing ever, it doesn't matter what they say. You need to believe it's the greatest stock ever, and the only way you're going to have that confidence in that stock is to go in and look at it. Take a look at the debt. Take a look at things like return on equity. Take a look at its growth. Take a look at its history. See what's happening with that company in the news. If you could have great fundamentals, but if you open up the news and it says right away, big scandal at Banana Co. Well, you may not want to be buying into Banana Co., especially if it's a huge scandal, right? Because that might mean Banana Co.'s stocks, are going to fall, especially if shareholders start to lose confidence in the company. So you always want to be taking that responsibility. Where I'm useful, other than being kind of funny, because some people think I'm funny. I think I'm funny, but not everybody thinks I'm funny. But where I think I'm useful is that, I will lead you to a group of stocks and say, okay, here's what's going on with these stocks. Then you can look at them and you can be like, that one sucks. That one sucks. Oh, that one's interesting. I'm going to go do some research on that one. That's kind of the way it all should go. Nice and easy that way, and that makes everything kind of fun. But anyway, so probably tomorrow I'm going to put out another poll, because next Friday we're going to do a deep dive, and I want you guys to vote on which company I do. So I'll drop that tomorrow. And as I said, Thursday night, So how long is this video going to be? I don't know. I honestly don't know. I mean, I'm planning for an hour, but it depends. I mean, I'm not going to end the video if I'm kind of like, being all crazy from the heat. I'll let you guys enjoy that. So it really comes down to how good the questions are and how the sauce goes. I know Jill says, "I want the right to stop it if I think you're about to die," and I'm like, oh, "Okay, sure," but that's once again, that's not going to happen. Um, Now, I will say this though. I think I've lost. I used to be really good with heat, but I think I've lost a lot of it. And so, because even now, if Jill puts something halfway mild or halfway to heat on my stuff, I'm just like, this is a little hot. So it could be a very interesting night. So I'm definitely looking forward to it. Richard says, I'm transferring my employer pension to my RRSP account with Questrade, hoping to make some extra money. Okay. Well, hopefully. Um, okay, so you're basically getting your employer to just drop that pension money into your RRSP opposed to having them manage the pension. I assume that's what you mean. And that's not, I mean, that's not a terrible idea at all. But I think the big thing to do is when you're playing a long game like that, you probably don't want to make big risks. You probably want to try to play things a little bit safe. So I would look personally, and if I was in that situation, I would be looking at total return stocks. So stocks that have moderate dividends as well as moderate growth. Because I think long term, those are going to be the ones that are probably going to give you the biggest bang for your buck in that RRSP. So that would be where I would go with that one, Richard. And you guys know I love those total return stocks because with a good total return stock, if you get a 10% dividend, or let's even say you get a 5% dividend, but you get 15% in growth, that's the same as having a 20% dividend when it boils down to the end, especially if you're somebody who just reinvests your dividend. Well, that growth part, you don't have to reinvest, it's already there. So, and we're going to touch on this a bit more. Like I've got a whole slew of videos planned. Especially I've got a few more in the retirement thing. Like I want to sort of I want to do one solid video that's entirely on how to handle growth within a retirement portfolio. So how to actually skew it off. And so, yeah, anyway, we got that going. There's there's just a lot that I have on the burner. All right, if you guys have any dying final questions, drop them in now because we're at about 1 hour, 12 minutes. So we're starting to peter. Well, I'm not petering out, but we're almost done here. It's almost time to go have some supper. Hopefully, you guys all have some really good weather here tonight, so you can get some barbecue. Unless you're in the Maritimes, but luckily, hey, you guys are getting that rain that you needed. So hopefully, those fires are put out sooner than later. Especially tomorrow, I think in Nova Scotia, you're going to get like 75 millimeters of rain. That's fantastic. So, I was talking to my mom and she was just saying it was smoky. So she lives not that far from, one of the big fires, but luckily you guys got the rain and everything seems to be finally getting back under control. Although the thing that worries me the most is we're only at the beginning of forest fire season. We got a whole summer to get through. So let's hope people are just being responsible when they are out on the when they're out and about. So would you recommend, let's see here, would you recommend any Canadian banks now or wait a bit? Well, here's the thing. Canadian banks are struggling a little bit. So in that sense alone, if you're looking to, like long term, they're fine. They're blue chip. They're going to come back. So right now, I put a lot of what I have into National Bank, I think is my biggest Canadian bank holding at the moment. But I think it doesn't really matter which bank you really go into. If there's one that you really like and you want to look at DCAing into it, this is not a bad time to be DCAing. Once we get back into a bull market, they're going to go back up. Now they have, and all of them have done this. All of the banks have been making the right moves by putting aside even more money for reneged debts. So they're prepared for what's going to happen because of the interest rates. So keep that in mind. They're making the right moves. They will recover. They're not going to be the big thing that recovers first. Like I think when we move into the bull market, um, and this is something I've actually said for a while. I've said I see tech as moving in first, and tech was the first to move into the bear market. So that's one of the reasons I've been since I think almost February. I've been DCAing like crazy into QQCC. So and that there is that's an ETF that covers the Nasdaq, and it's doing well. It's been picking up. It's been doing really really well. So that one I'm kind of good. I'm good with. It's a nice little one. So that I've been moving into now. Once we move back into the bull market, I mean, I actually like the dividend that's on QQCC, so I don't think I'll move that out, but I'll start to focus my attention a little bit elsewhere by trying to figure out what will be the next sector to really start. Because I don't see it as everything all going whoop right away. I see it as we're going to get almost a bit of patchwork moving up. So we'll have the Nasdaq first. After that, it could be. I don't think it'll be financials. I think they'll be a little bit further along. But it'll be interesting to sort of watch. I missed this. Which sector are you currently favoring? Tech right now. I think I answered that without even. I missed the question, Vaughn, and then I answered it, which is hilarious. But yeah, I'm right now. I'm favoring tech as to make that recovery first. There's also, of course, the hype for AI. That's not a bad thing. Will that hype start to die down? Yeah, it'll die down. But by that point, I think we're going to be at the beginning points of a bull market. So I think tech is a fairly safe bet right now. Now, I wouldn't, when I say that, I'd be careful of penny stocks because you're going to see a lot of penny stocks trying to sort of capitalize on the whole AI craze. And the problem is, like any kind of bubble you get, like an AI bubble or like the .com bubble, a lot of those companies aren't going to make it. So I would be, I would, I don't like to gamble, and that would to me is a gamble. So I would say go for your more established, get in with your blue chippers, get in with your Microsofts, your Nvidias, and ride that up. So that'll be good. All right, let's see. Any good book or videos to learn more about trading you would suggest? Yes. I will say right now, one of the best line of books for learning are the dummy books. So you can get a whole bunch of different ones. So right now, I'll give you an example. I've got a few of them even on my iPad here. I'm just going to go in here and I'll show you a couple here. Right. I can understand that, Wayne, mentioning that QQC has low volume, but I'm also looking at holding it for a little bit longer, so I'm not too concerned. That would not be a stock I would be looking at to flip. So let me just take a look here. I know I've got a bunch of these dummy books here on the old Kindle. Here we go. Just open this up here. And I'll go right to the library here. So when we look here, so we got, you guys see this? So the first one up there is Fundamental Analysis for Dummies. I got Swing Trading for Dummies, Day Trading for Dummies. Let's see. Stock Investing for Dummies, or Stock Investing for Canadians for Dummies. Now, the dummy line is pretty much the best line for learning. Don't be afraid of the word dummy. It doesn't mean that it's designed for dummies. It's on the contrary. It just gives you a very good, I think, a little bit of a foundation. Then from there, you can then move on. And you can find the dummy line for pretty much, this is a beautiful thing. It doesn't matter. It doesn't not just investing. Anything that you're interested in, there's always a dummies book for it. And that's a great place to get your foundation. Then once you've got a foundation, then you've got enough knowledge to know which direction you want to move in within that field. So I definitely highly recommend any of the dummy books. All right. And Andrew says, hope you have an awesome rest of your weekend. Perfect. That's a perfect one to end the stream on. You guys also have a fantastic weekend and be here Thursday night, 8 p.m. Eastern. We're going to do the Hot Ones Challenge. It is going to be a hot broadcast. So until then, everybody, I will bid you guys a farewell, and we will see you again Thursday. Bring your questions, and it'll be a lot of fun. All right. Good night, everybody.